We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back up to business. All right, guys, we are in the market today. We are checking out AUD CHF. That is the Australian dollar versus the CHF franc. Forex 101. Number one, we'll be identifying market structure. Number two, identifying overall trend. Number three, identifying SR lines in the market. Number four, identifying patterns for entry. Let's start off with market structure. Back in November of 2001, market has started off here. It went straight into a push up. From there, the market pushed back down. When the market pushed down, because it wouldn't break this resistance, the market went into areas of lower lows, and it also created a pattern that I see on a monthly time frame, which is the W pattern. When we find W patterns, that most of the time W patterns are showing the formation of a push up in the market. Sometimes there's a reversal, but most of the time there's a push up. We have the first leg of the W, we have the second leg of the W, we have the third leg of the W, and then we have the push up. We have the retest, and then we have a push up again, and the market retested previous areas of where the market couldn't break through a resistance. The market pushed up again for the third time. I think that's the third time. 1, 2, 3, yes. Maybe 1, 2. The market pushed up maybe about the third time, and then it ran into an area of resistance all the way across the board. There's another pattern that formed, which is a W. There's the first leg of the W here. We have the second leg of the W here. Third leg of the W here. And then this is the fourth leg of the W. This is where the price action retest previous areas of resistance, and then the market pushed up. The market pushed up to previous areas of resistance, and it wasn't able to break through for the first time. It retested like for the second time and maybe a third time here in this area. And then the market wasn't able to break through the resistance, so the market broke back down. Wasn't able to drop back down to previous areas of support. And as we can see that the market has put itself in some type of consolidation. And if it breaks up, it may be breaking up out of consolidation. If it breaks down, it's going to break down that consolidation. So once the market did that, the market pushed up again. So it came back to retest previous areas of support, which is its area, but it really looked like it's trying to come back down here towards the bottom of the lowest low, first level lowest lows, but it retested second level areas of lowest lows. And then the market pushed right back up, and it created a new area of resistance. And this is where the market's, so this area here back in October of 07, this is where the market has been at the highest peak ever. From there, the market pushed up, touched once, came back down into an area of support, to push up again for the second time. So the market attempted to push out twice, wasn't able to break, so the market went back into our consolidation. Tried to break up out of our consolidation, and it retested that resistance line, our resistance line, to push all the way back down. It didn't just retest our resistance line, it tried to break through the resistance line a few times, and then the market wasn't able to hold, so it did a hard drop to the bottom, which you can see is 3 bearish candles, 1, 2, 3, and the market dropped right back down into a major area of lower lows, as we can see. So if we draw these lines over, we can see that we got an area of here. This will be an area of consolidation which we can trade, and then we have a second level of areas of consolidation which we can trade as well. The market has pushed down all the way to the bottom of this support. From here, I can see a few wicks, so it probably, if I go down the time frame, I can identify it, but from experience, as an experienced trader, I can see that the market did touch this a few times. That's why we can see them wicks dropping down on my red line. From there, let me go back. I want to pinpoint something for you guys in the market that can be extremely helpful. Okay, so when we receive that big push down to the bottom, we see this long wick here. So we have a long wick here, we have a long wick here, there's a wick here and a wick here, and it's getting wicky over here. So all these areas is a whole bunch of wicks. So when I start seeing these wicks dropping down like this is showing me, okay, you know what? This is a long wick. So the market is trying to turn around and go back, and go up and stay up. So this is where we had the bearish drop. The market created new areas of support. Wasn't able to break, push back up, and it broke our previous area of resistance to go into the next area of resistance. Wasn't able to break, so the market pushed back down to retest resistance, to push back up to retest support, to push that back down to test resistance, to push back up to test support. And what just formed? It's a W formation. Once again, when we see W formation, we know that it's going to be a push up to the top. And if it turns around, we'll see the confirmation. We'll just take the turnaround. So we got the first leg, we got the second leg, we got the third leg, we got the fourth leg. Once we get that fourth leg, we know there's a retest coming, and there's going to be a push up in the market. The push up happened. It broke through our resistance. To retest our resistance, it held, came back out of it, broke through our resistance to retest previous areas of resistance again, to not break it, and the market just dropped. Once the market dropped, the market dropped out of our support area to retest our support area, to break down further, to retest our support area again. So what the market is doing is it's trying to create that W formation again to push up higher, but it's not enough momentum in the market to push up. So like I said, when we see W formations, we know that we're looking for that retest, and the retest would have happened somewhere here, and we were supposed to have a push up through this resistance for the market to go up, but that did not happen. What happened was, after the market created that W, after the retest, it wasn't able to push up further. So what we had, only thing left was for the market to just do a straight drop. Once the market dropped, we can see that it broke through our resistance area during the time when the market started off years ago. And then the market broke through the area of lower lows back in 09. And we have wicks here, and we can see how our trend line is being respected by these wicks and being touched. So we got one touch, two touches, and then look how everything just lines up so nicely in this area all across the board. So we can see that the market is putting itself into another area of consolidation here, but it broke through the support, and now we see another pin down to the bottom, or wicks to the bottom. So when we start seeing these wicks, okay, the market's trying to turn around and come up. Wicks to the bottom, 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 wicks to the bottom. We keep seeing them all over, and then now we finally see that turnaround. So then the market broke through the support, the market broke through through the support, went back into the support, and it basically just traveled along the lines of the support. It broke, yes, it did break up to back to resistance, but it went back to support. Let me fix this up a little bit, because so the market is respecting our SR lines, bouncing on and off above and below it. The market pushed up into our resistance, to push back into our support, to push back up to our resistance, wasn't able to break through, to push all the way back down to new areas of lower lows, and now we see a long wick at the bottom, and now we see that market look like it's trying to push back up to previous areas of resistance. We are going to clear our screens. Okay, that was market structure. So we identified with market structure that the market is headed for an uptrend. There's a chance it can turn around, but right now we can see that it's headed on an uptrend on the monthly. Number two, we are identifying overall trend, the overall trend. So what we're going to do is we're going to grab our square box and we're going to look for price action. And we're going to say, okay, if price action breaks the next level above of higher highs, then what's the next level is going to go to? So once market break this, the next level will look like somewhere here. So what we're going to do is we're going to grab this section here. We're going to put a rectangle around this area and we're going to grab it to the bottom of this wick because that's where market can fall back down at. And we can see that if price action breaks this rectangle square, it's going to head up to the next level, which will be somewhere here. So we just identified our overall trend. Our overall trend is in a uptrend. And look how price is respecting that. Look how the candle is respecting our trend line that we created. Number three, we are going to head over to SR lines. Let's take a look at this. So SR lines. First thing we're going to do is we're going to look for price action. What's price action? Price actions is the last candle. That's active or non-active. That's price action. So the active is active because the market is open. So if we look for price action, we can sit here and say, okay, you know what? If price breaks the next level up, it's going to go up, further up. So we know our next price of breakthrough will be the top of this rectangle, square. The next area of if the market drops, and this is when you start looking for peaks, you look for price action, you go below the price action to look for the next area of peaks. From being experienced in the market and know what I'm doing and being used to what I'm seeing, there's something called inverted peaks as well. And if this is price action, the next inverted peak will be here. And if you see how price and the candles are respecting our area, is because it bounced down here, it came up, and you can see how the wicks touches. Even if they don't touch to a T, we understand the concept. You see what I'm saying? Once we see two wicks that will come to this area here, and it's getting real wicky in this area, and we know it's going to be a turnaround. So it don't have to be perfect. You don't always have to wait for your wicks to hit your green lines or close to it. If it gets close to it, hey, just take your profits, take your trades, get up out of there. Secure the bag. Secure the bag. If we head down to the next time frame and we work on additional SR lines, what we're going to do is we're going to grab our SR lines, we're going to change the color so we can have identifications on the colors per time frame. So when our candles are running into our SR lines, we know what time frame the SR lines run into. So here we're going to fill up SR lines between our green lines, and we're looking for peaks and inverted peaks. So there's a peak here. There's a peak here. There's another one here. There's one here. We have, look like some inverted peaks sitting in this area here. And we may have one more here. But I'll probably just leave that one alone. So we have just identified all our SR lines. Number 4, we'll be identifying patterns for entry. We're gonna head down the time frame again. we can take a closer look in the market to see what's going on. So I'm big on patterns. I like looking for patterns. Patterns makes it so much easier. Once again, go to Google, type in pattern cheat sheets, or pattern cheat sheets, or Forex pattern cheat sheets, and you'll find patterns on there. So I see a pattern now, and I'm going to identify it for you guys. On CHF, I see a W. So the market pushed up here, and it's the first leg. This the second leg, this the third leg, this the fourth leg, and we have a retest here, and then the market pushed up. From being experienced in the market and being a master trader, there's something going on in this area here. If I go down the time frame lower, I can see, but there's something going on here. I think the market's going to either come up and come back down. There's something going on. The push-up looks strong. It looks funny, but it's only been the next candle close out will be in the next few hours, and maybe we can see some type of better movement. But for right now, the market is respecting our trend line, and it's a little right against it a little bit, but it's still going up that up. So once we have that breakthrough, we're looking for a retest, and then we'll take entry for a buy, and we go back up. So the market just broke through our SR lines. So what we trade, I gotta add this to my list. So what we trade is the breakout and the retest. So what this market is doing is the market broke out of our SR line, and all we're looking for the market to do is come back to our SR line and for us to take entry in this area so we can take it all the way up for the next ride, to the next level. So that happens, we see the pattern. Let's take a look at how many pips that would give us for this trade. So price, we will be taking entry somewhere here when the price come back and retest. So from this SR line to the next SR line, if we tighten up our stop loss, so this is what this move would look like. It would look like something like 155 pips on the way up, and on the way down, we're looking at an estimate of 40 pips on the way down. That's an amazing trade. 155 pips on the way up, 40 pips on the way down. That is an amazing trade, everyone. Okay, everyone. This is Cam Jones, FX Daily Analysis. Thank you for your attention.